afternoon, everybody, and welcome to another edition of our infamous, or should I say famous, Resolve It in 30. Okay, where you bring the questions and we bring the answers. Today, I'm really thrilled to be able to have with us Wilma Bonilla from the SBA. And Wilma is really going to talk about one of the most important programs that we have. It's the Restaurant Revitalization Fund. Okay, now this is separate from the PPP. It's separate from the EIDL. Okay, and this is a program in and of itself, so a standalone. It is a very important program, people. Okay, this is money that is sitting there for you to get. Okay, it's not that difficult. It requires a little bit of work and a little bit of tenacity, but once you have that, you've got this money. So I want to hand it over to Wilma Bonilla. Please remember, folks, to mute your mic. If you have questions, put them in the chat box. And we'll take it away. So Wilma, take it from here, and thank you so much.
Good morning, everyone. Hi, my name is Wilma Bonilla. I see that we have Nicole here with us. Hi, Nicole. So, as I was saying, my name is Wilma Bonilla. I work for SBA. Our office is located in King of Prussia. We do cover the 40 counties to the east of Pennsylvania, but we have presence all over the United States, including their territories. So if you can slide to the next one. So now and today we're gonna talk about the Restaurant Revitalization Fund, or the RRF. Next one. So this program was established thanks to the American Rescue Plan. And you have to keep in mind that the appropriations will be available till funds are exhausted. So Nicole, if you haven't applied for the RRF, please do so as soon as possible. So you get, at least you have your turn and you have your application, going through the process. Next slide. I think you need to continue like clicking. Next one. Also, funds for the RRF must be used for eligible expenses incurred through March 11, 2023. So you have till March 11 of 2023 to actually utilize those funds. The minimum award, it's gonna be 1,000. The maximum, it's 5 million per location for a total of 10 million, including affiliates. So what's the eligibility for the RRF? If you fall under one of these types of organizations, you can apply for the RRF. If you're a C Corp, S Corp, a partnership, LLC, sole prop, self-employed, independent contractor, or LLC taxes, S Corp or sole prop, you can apply for the RRF. Okay, next slide. What are some eligible entities? If you're a restaurant, if you're a food stand, food truck, food carts, caterers, bars, lounges, taverns, snacks, and non-alcoholic beverage bars, for example, coffee shops, ice cream shops, or other similar places of business in which the public or patron assemble for the primary purpose of being served food or drink. I don't know if you can unmute yourself, Nicole, but what type of entity are you?
Sure. So my name is Nicole Marcotte, and I actually work for a nonprofit. It's called the Welcoming Center, and we support immigrant-owned businesses in the city of Philadelphia. So I'm here to gather information and to share it with a group of about 20 food and drink businesses. And I'm happy to see the ice cream shop because we have one too in that group.
And
welcome,
thank you.
Yeah, for you that work with immigrants, you know that borrowers and business owners that have unexpired ITINs, they can apply for the RRF. Mm-hmm. So keep that in mind.
That's why we're particularly interested for this opportunity. Thank you.
Yeah. Okay. So, however, entities below must have on-site sales of food or beverage to the public that comprise at least 33% of gross receipts. Example of these ones are bakeries, breweries, microbreweries, wineries, and distilleries, and inns. They're eligible, but they need to complete additional documents. So they need to submit more documents because they need to prove that at least 33% of gross receipts are from a restaurant example kind of thing, okay? Next. However, not eligible entities, state or local government operated businesses. If, as of March 13, 2020, owns or operates more than 20 locations, so that's the cap. You have to have no more than 20 locations. Has a pending application for SBOG or the Charter Venue Operator Grants. So you either choose to get one or the other. So it's either the RRF or the SBOG. If you're a publicly traded company, you're not eligible. If you permanently close, you will not be eligible. Non-profits are not eligible for the RRF. Okay, if you for somehow you're not eligible for funding of at least 1,000, SBA will not approve that application. So the minimum award is 1,000. Let's talk about bankruptcy. In order to be eligible for the RRF, you might, you might be eligible if you're under Chapter 11, 12, or 13, and you have an approved plan. If you do not have an approved plan, you will not be eligible, okay? So you would not be eligible if you permanently closed, filed a Chapter 7 liquidation bankruptcy, or filed either a 7, 11, 12, or 13, and you don't have an approved plan. Okay, so if you do have an approved plan, you can apply it and still be in bankruptcy. Next slide. What about franchises? Any business that is a franchise and meets all other programs requirement is eligible to apply for the RRF. The franchise must be listed on the SBA franchise directory. If you actually go into the application, it's kind of a streamlined version, but if you choose the box that in fact you're a franchise, there's the whole franchise directory over there, so it's not that hard. Next slide. What about cross programs? If you get, what about if you got the PPP or the Paycheck Protection Program? Let's say you were approved for the PPP first draw or second draw. For this program, they will subtract any PPP loan that you got. If it's still in process, SBA is actually telling borrowers to withdraw that application because then it can interfere. So you can either choose to get the RRF or the SBOG. However, you can still apply for the RRF and have the EIDL and some other programs. But you have to make sure that if you got the PPP, it is approved and you got funded. If not, and it's still in process, you will need to withdraw that application. And see, if you have an IT number and it's valid and unexpired, you can apply for the RRF. And this is very important to our community and minority-owned businesses that have ITs. So, as I was saying, if you have the PPP, funds will be subtracted for your final funding amount. If you, in fact, were approved for the PPP, remember that you have to utilize like the same information you included in the PPP for your RRF. So let's say you have to utilize the same EIN, the same company's legal name, and so on and so forth. Because if not, like the system can create like glitches and it can take longer. So make sure that you include the same information you included in your PPP. Next slide. Priority groups. as most of you know, the first 21 days of the RRF are the only ones that are going to be reviewed, are the groups that fall under priority groups. So which are these groups? Next slide. A business concern that at least 51% is owned either by women, veterans, or socially and economically disadvantaged businesses. In the application, the applicant must self-certify that they meet this eligibility requirement. If you somehow self-certify yourself as falling under one of these categories, and in fact you're not, you're gonna be disqualified for this program. Next slide. So what about socially disadvantaged individuals? Are those who have been subjected to racial or ethnic prejudice, meaning African Americans, Hispanic, Asians, and natives. What about economically disadvantaged individuals? Are those socially disadvantaged individuals whose ability to compete in the free enterprise system has been impaired due to diminished capital and credit opportunity? One example of this is American with disabilities. And of course, you will be disqualified if you self-certify yourself as falling under one of these priority groups, and in fact, you're not. What about different scenarios? And here is the fun part. This will impact your calculation, but the system will do that automatically. The only thing you need to know is which scenario you fall under. So first one, if you're in operations prior to or on January 1st, 2019, you have to utilize the following formula. So it's 2019 gross receipts minus 2020 gross receipts minus any PPP loan, and that's your total amount. But don't worry, the system will do that for you. The only thing you need to include and add are the actual numbers. What about the second example? If you begin operations partially through 2019, you will use this formula. So it's average 2019 monthly gross receipts plus 12 minus 2020 gross receipts minus any PPP loan, and you get your total amount. Okay. Next slide. What about the third example? If you begin operations on or between January 1 of 2020 and March 10 of 2020 and have not yet opened, but have incurred eligible expenses as of March 11, 2021, you can use this calculation. And this particular scenario is very important because business owners that have begun operations but not have yet opened, but have incurred in some eligible expenses can apply for the RRF utilizing this formula. So you add eligible expenses minus 2020 gross receipts minus 2021 gross receipts minus any PPP loan, and that's your total amount. Next slide. So how much to apply for? Example number 4. If you operate multiple locations using different calculations, you may calculate funding amounts for their locations using separate calculations methods, and then aggregate the amounts all together. The aggregate amount will be limited to 5 million per location and 10 million for the applicants and its affiliates. So what's different for the RRF? In terms of gross receipts, you can exclude first draw PPP, second draw PPP, any payments made under section 1112, Nicola, I don't know if you're aware of these payments. These were payments made for other SBA programs such as the 7A, micro loan, and the 504. Okay, so if you're working with one borrower that actually got these payments, they need to exclude this for gross receipts. If you got the EIDL or the EIDL advance or the targeted EIDL advance or the supplemental targeted EIDL advance, you can exclude them from your gross receipts or any local and state grants as well. Because, you know, for other grants, you need to include them as well as part of your gross receipts. For the RRF, you don't have to do that. So what about applying and the documents you need to submit to SBA?
Excuse me, Wilma.
Sure.
I think Nicole has a question. This is a good time. Ask the
Yes,
question.
I was wondering if we could go back to scenario 1, that slide, so I can take a screenshot because it's really helpful, that visual, but I didn't
I'll be
get a
sending
chance
the
to-
slides.
Thank you. That would be
I'm happy-
beautiful.
yeah,
Thank you, Jael.
We'll be happy to send the deck to you. Absolutely. Absolutely.
So where exactly do you apply for the RRF? You can utilize our SBA platform. You can visit restaurants.sba.gov. You can visit one of our point of sale vendors, such as Clever, Toast, or you can actually request the paper application by phone. But keep in mind that that will take a while if you choose that route, because you need to call SBA. SBA needs to actually mail that application to you. You need to fill that out and notarize that, and then send it back by mail as well. So, I mean, but that's an option. What documents do I need? The application. If you use our platform, you don't need to use the SBA form 3172. However, it's beneficial to your borrowers if they download that form, because they can use it in terms of figuring out what SBA is going to ask in terms of questions. So it's always, you know, recommendable for you to download that form. We will also ask for the IRS form 4506T. If you're using our platform, it will pop up and you don't need to actually, you know, download or upload that document. What about gross receipts documentation? You can actually include any of the following: tax returns, IRS form 1120 or 1120S, your 1040. For partnerships, IRS form 1065, bank statements. You have to include at least 3 months worth of bank statements. From people that are reviewing these applications within SBA, they are saying that a lot of borrowers are not complying with these requirements, and it can delay your application. So make sure that if you're working with a business owner, that they uploaded 3 months worth of bank statements. They also can utilize externally or internally prepared financial statements, such as profit and loss statements. You can utilize point of sale reports, including IRS form 1099K. Next slide. If you have any issues applying for the RRF, or if you have any questions, you can contact our hotline. Of course, you can reach out to me. You can contact your local district office, that's me, if you need any help with it. Or you can reach out to the chamber as well. They will be helping out with that. I didn't forget. Next slide. What about the other self-certification that you will be making? So you must certify that current economic uncertainty makes the funding request necessary to support ongoing or anticipated operations. Because remember, not everyone got hit by COVID, like other businesses actually excel. So you have to actually certify that you need this. Best practices: provide complete documentation. Make sure before hitting that submit button that everything is correct, meaning your business information, your numbers, that you uploaded the correct documents, and so on and so forth, because if not, it can delay the process, because you cannot go back and change or edit your application. Then you will need to actually call the hotline and, you know, figure it out how you can edit your application. Okay. Use of funds. How can I use these funds? Eligible business expenses. You can utilize the RRF to pay payroll costs, utility payments, supplies and suppliers, food and beverage expenses. You cannot expand your businesses, like you cannot utilize these funds to expand your business. However, you can utilize these funds if you have to actually make a construction for outdoor seating. Okay, and then you can actually utilize these funds for any payment on any business mortgage obligation, principal and interest, or any business operating expenses such as insurance, marketing fees, license fees, POS equipment. Okay.
So
Next
Wilma,
one.
I have a question. So with the eligible business expenses, okay, let's say I get, you know, pick a number, I get $25,000, okay, after the funding comes through. These business expenses, are these expenses that I can sort of refill my pockets retroactively, or are these expenses moving forward?
I mean, there is a timeline where you can actually, you know, where it covers, I believe it's March 2020 till March 2023. So that's your cover period.
Gotcha.
Next slide. As I was saying, the funds must be spent on expenses that were incurred between February 15, 2020 and March 11, 2023. If the business permanently closes after receiving these funds, the cover period will end when the business permanently closes, or on March 11, 2023, whichever occurs sooner. Any funds not spent on eligible expenses by the time the cover period ends must be returned. Next slide. By when, and this is an important slide, by when do I have to use the funds? We're still waiting on how exactly this is gonna look like, but there is a use of funds, and there will be a use of funds assessment. So after the total awarded funds have been exhausted, you must provide a detailed expenditure report and certification for the required period. So I mean, keep track of on what you're using and utilizing those funds. Like keep documents, keep receipts. I mean, you can create your own Excel spreadsheet on, you know, how you're using your funds.
Excuse me, Wilma, this is where, we really preached this, and Nicole, pay attention to this when you go back to your folks, okay? One of the things that we really preached was when that money came in, whether it was the PPP loan or the EIDL, okay, that the business owners set up a totally separate account, okay? Keep it pristine from anything that you have, whether it's personal money, PPP money, EIDL money, because the documentation becomes real, as Wilma said, really, really, really important. And if it's a separate account, it's going to be very simple to prove what it is, especially if it's not only a separate account, but the entrepreneur has a, you know, sort of an internal accounting system like a QuickBooks or, you know, something along that line. So FYI on that.
So until you complete the use of funds assessments beginning December of 2021, you will be required to provide self-reported, unaudited data detailing use of distributed funds each year through 2023. That's why that separation and two complete accounts will help you out with that, since it will keep like funds totally separated. Next slide. And of course, if you need additional information, you can visit us at sba.gov/restaurant. You can call center hotline, or you can locate your local district office or contact me. Okay, or you can contact the chamber as well.
There you
Next
go.
slide. And if you have any other questions, we're here.
Wilma, let me ask a question, and Nicole, the floor can be yours in a second as well. I'm sure you have a ton of questions, and if not, think of one. There you go. But let me ask you, because a lot of people are going to ask, what's the difference between this loan and a PPP loan? I understand that this is specific to the restaurants, okay? But what is the difference here if somebody, had already gotten a PPP and wants to go after this versus, like the PPP?
Sure. So remember that the RRF are direct payments. The PPP might not be 100% forgiven if you don't follow some requirements. And then for the RRF, what I'm seeing so far is that they included additional eligible expenses. Because the PPP, it's just limited to payroll and other eligible expenses such as utility, leases, interest on mortgages, and be utilized for other eligible expenses.
Right. And, from the application perspective, and Wilma, correct me if I'm wrong here, the applicant either needs a social security, an EIN, or an ITN. Okay. One of those three. All righty.
Mm-hmm. Correct. But it's important to emphasize that for the ITN, it needs to be a valid, unexpired ITN. Mm-hmm. Okay. In what happened with the PPP, and this is, it's just my 2 cents on it. Remember for the PPP when Biden actually went out and said that ITN and borrowers with ITN were eligible to apply for the PPP, they emphasized that they needed to be legally in the United States. So keep that in mind.
Good. That's a good point, Wilma. This is the cool thing about this is it's gross receipts to gross receipts. Okay. So say, for example, somebody was in business in 2019 and the gross receipts were $100,000. All right. They got shut down and, we're basically hanging by a thread in 2020 and their gross receipts were $25,000. Okay. So it's 100 minus the 25. Okay. You're eligible for 75,000. If you got a PPP loan somewhere in there, you back that number out, whatever that number was, say it was 20,000. So you're down to 55,000, but that's how it works. It makes it so much easier as long as you've got the gross receipt piece. And like Wilma said with the SBA, if you are, and if it is an entity that does food and beverage as well as some other things, okay, you just got to show that you've got 33% food and beverage gross receipts. And again, here we go. That's all the accounting, okay, and that ought to come right out. I mean, the organization ought to have that pretty simply. So with that, Wilma, let me thank you for your time. Nicole, let me thank you for being part of the live presentation today. I encourage everybody to not forget about La Mega, which is our sponsor here. And also, obviously, thank you for participating, and check our website early and often, okay, because we are doing stuff all the time. Bye, everybody. Be well.